What's going to happen with these 1099 DA, especially as we get started, is they're going to report ridiculously high numbers, misleading numbers, numbers that would mislead the IRS on the surface of them. Why? Let's say you do a lot of selling on Coinbase. You had 10 sales, and together they all add up to, say, $100,000. Coinbase is going to report these 10 sales totaling up $10,000 of proceeds, but there will not be any cost basis. The first year, they're not required to add cost basis. And in subsequent years, if you didn't buy it from them and leave it on their exchange, they'll have no idea what the cost basis is. So the cost basis that's reported will either be zero or a small number, not the true number. That will look like a lot of profit to the IRS, will get them excited, but it's not true. It's overstating. How do you handle this? We can get into the technicalities, but here's what you have to do. You have to report the 1099 on your tax return. You have to account for it. Otherwise, you'll get selected for an unreported income audit later. Here's what we do. You report the 1099, but then you adjust the net gain off. On a 1099, you can add in additional columns for an adjustment, and you basically adjust the total proceeds off, leaving zero gain. And that way you account for the 1099, but you have taken any income off of it. Then you're going to go back and recalculate your cryptocurrencies using whatever tool or coming to CryptoTaxAudit to do it for you. And then you report the actual number that you want to report, the true number. So that's what you're going to have to do. Administratively, this is going to be complex for a lot of tax preparers who aren't savvy for this sort of mechanical work. I think a lot of people are going to be scared, terrified to do this sort of thing, and it's going to be complicated for the individual investor as well. But it's something that we just have to adjust.